Welcome back. As we saw just a moment ago, the price of West Texas Intermediate crude oil has retreated to below 81 US dollars per barrel. Let's talk to an expert on what factors are affecting the price of crude. There's a WTI at 1 penny more than 81 US dollars per barrel. Let's talk to an expert. He's Rory Johnston, founder of Commodity Context. He publishes regular updates on the price of oil and other commodities. Rory, thanks a lot for joining us. What you have been writing about recently is Chinese demand, and that is something that oil investors are always concerned about. The great hope among investors who are long oil or long the shares of oil-producing companies is that Chinese demand will pick up in a significant way and add to the supply-demand equation towards higher prices. What have we seen so far this year in demand from China?
Yeah, so I just published on the topic of Chinese demand, and I think the important thing for people to remember is last year's demand growth out of China was astronomical. It was nearly 2 million barrels a day year over year, and even if that was benefiting from 2022's kind of depressed base effects of the COVID-0 kind of lockdowns in China, it's still the largest growth of any single country in the industry's history. So any kind of even impressive growth in 2024 in China is going to look like a slowdown from those really, really heady levels. So last year we had almost 2 million barrels a day of growth. This year, most folks are looking at between 500 and 700,000 barrels a day of growth. That's still likely going to be about half of the global incremental demand in petroleum products, alongside other major growth centers like India. So far, we've seen this year, the first 2 months of the year in China, we've seen kind of a strong, steady maintenance of those high levels we saw last year. But I think, because it was such a high bar, we're really going to need to see an acceleration into the summer in China to kind of re-hit those high levels and then push beyond them to actually see growth.
How does the COVID period in China affect all this with those very severe Chinese regulations and closure policies during the period of COVID and what people might call the aftermath period of COVID? Might it be the case that in 2023, demand leapt over a very low bar, given the recent history?
That's exactly right. And what we actually saw in China was in 2022, it was actually the first full year annual average that Chinese demand actually contracted on an annual average basis in something like 20 or 30 years. So essentially the first time in modern Chinese economic history. That's a huge deal and obviously sets a massively low bar, like you said. So we have a low bar, now we have a high bar in 2013. And I think now 2024 is going to be this really important year, essentially resetting what we think of as the trend. Now that we've exited COVID, we've exited all these base effects. Now it's going to be this question of how strong can Chinese growth maintain? And you have, a lot of people have been calling for peak or near peak Chinese demand for a while now, including many of the kind of major refiners and petroleum companies within China, citing things like Beijing's strong commitment to electrification of the fleet. But even with that said, we're continuing to see strong gains in gasoline and diesel, and I think even more notably in things like liquefied petroleum gas and naphtha that are used as feedstock for the Chinese petrochemical industry.
What has remind us what the IEA has said recently? That's the International Energy Agency. That forecast seemed to take a more bullish tone recently.
Yeah, that's exactly right. So the IEA, among all of the three major agencies that watch and kind of record oil data, that being the IEA, the Energy Information Administration in the United States, and OPEC, the IEA, in many cases, and as we've seen actually in many of the debates that are happening in the United States right now, are often seen as kind of biased towards being slightly more bearish in the market. Despite that, the IEA actually had by far the strongest both level of estimation for Chinese demand last year, as well as the strongest pace of growth. Now they do see that falling back, but again, from an extremely high level, I think they have Chinese growth last year something like 1.6 or 1.7 million barrels a day, which is extremely strong levels.
What about supply? What are we seeing from, for instance, the super majors and their ability or interest in producing more oil?
Yeah, so I think for supply this year, really, we have a couple areas of the world that are going to continue adding incremental barrels, regardless of what happens. Canada is likely going to see growth this year, also because of just steady growth out of the Western Canadian Patch, as well as the anticipated startup of the Trans Mountain Expansion Pipeline, and also depressed base effects from last year, given the wildfires and heavy oil sands maintenance. Beyond that, you're going to continue to see growth from Guyana and Brazil and Latin America. And really the big ball part, like the whole ball game really comes down to, much like Chinese demand is slowing, we're also going to see U.S. shale growth slow this year to some degree. Now, last year growth, almost doubled early expectations. This year, again, expectations are much lower. But in my entire career thus far, about a decade of surprises to the upside for U.S. shale, and I think right now our bias should remain that whatever we think it's going to be, they're likely going to surprise slightly to the upside at least. So I think that's going to set the tone, and it's essentially going to create the environment in which OPEC can either, finally pull back those cuts, or it's going to have to maintain them.
Let's finish with Western Canadian Select and the imminent beginning of operations on the Trans Mountain Pipeline expansion. There was a news report recently, I'm sure you saw it, that a big Chinese buyer agreed to take a shipment in the near future. So we are ready to go finally on this pipeline. And of course, the expectation is that we'll see a material increase in the price of Western Canadian Select, and more to the point, a narrowing of that huge differential between Western Canadian Select and West Texas Intermediate crude.
That's exactly right. So I think the most important thing for everyone to remember about why TMX is so important is that after a prolonged period of none of these pipelines really getting to the finish line and continued growth in production in the sector, where we've constantly been up against kind of the razor's edge of egress capacity and these blowouts and differentials. So the first thing that this is going to do is it's going to finally reduce or eliminate at least the near-term probability of those blowout differentials happening again, as well as likely kind of structurally narrowing what we would consider the steady state differential. The important thing you note about this first Chinese buyer of crude coming out of the TMX pipeline, I think they're anticipating delivery around June. We're going to figure out the final in-service date in the next couple of weeks for TMX. But the reason that's so important is there have been a lot of debates, particularly political debates, about the TMX pipeline and whether or not this egress and this avenue to the Pacific is actually going to diversify our consumer or our export basket away from the United States, or whether or not those barrels will just go into California. And so far, what we're seeing is kind of confirmed, a revealed preference, if you will, of Asian buyers actually buying this crude and taking it across the Pacific.
That's interesting. So last question. What you're saying is that a further narrowing of that differential largely depends on who's buying the oil, and what the market would want to see from that point of view is more buyers, I assume, from Asia. Is that correct?
I think it's slightly different. I think the main impulse on the price is just the fact that we have egress, away from Pad 2 in the Midwest, and kind of finally getting out to the Pacific. I think that's the most important point. I think there's been this broader debate about the importance and the criticality of TMX and whether or not it really truly diversifies our exports. That was part of what the federal government's investment was premised upon, and that's why it's become so political. And I think what we've seen so far is that this is indeed kind of confirming that yes, Chinese buyers, and I think in the future likely Indian buyers, are going to buy these barrels and bring them across the Pacific, because not all of these barrels are going to find homes in California.